Hey Team FXG, hope everybody's having a good day. We got two analysis today, Euro Kiwi and gold. We're going to start Euro Kiwi on the monthly. Now, this is one of those entries that we're going to take it down to the 1 hour time frame to look for an entry. So as mentioned, no matter what time frame you're looking for an entry, you must start your analysis on the monthly, okay? Taking it to the monthly, we identified our monthly upper and our monthly lower zone. Horizontal sell sensitivity, horizontal buy sensitivity. When you have sell protection from the upside and buy protection from the downside on a horizontal level, what does that mean? That's right, you are in, or we are in, a higher time frame consolidation period. What do we do after we identify area sensitivity? We try to talk flow. So we see bulls took control from our monthly lower zone to our monthly upper zone. We see sell sensitivity as expected. Now, the overall highest probability play on the higher time frame is eventually a change in direction and a continuation of the consolidation period. With that being said, that doesn't mean price is ready for a change in direction. When we look at price action, what do we notice here? We notice that price had a close of a bullish engulfing candle close on the monthly time frame. And we know that a bullish engulfing candle close on the monthly time frame, when we take it to the lower time frame, so this is the weekly, that's a push. Now what's after a push to the upside? An exhaustion to the downside, which we see beginning as we speak. So here is a bullish engulfing candle, a push, and now we're seeing sell sensitivity. That is simply an exhaustion on the lower time. Now the one thing to notice here is that price has failed to retouch its monthly upper zone. So why are we seeing such strong sell sensitivity at completion of a push? Well, we have to be careful of all other patterns. Here we see a potential head and shoulders pattern. This is a very well respected pattern by the market, and we're seeing sell pressure enter the market at completion of a push as expected due to the potential head and shoulders here. So this analysis is giving me a really good opportunity to show you how every time frame has its own push and exhaustion cycle. So as we know on the monthly, this is a bullish engulfing candle close. On the weekly, this bullish engulfing candle close is a push. This is the beginning of exhaustion. When we take it down in time frame to the daily, this is our weekly push, our weekly exhaustion. However, here's a daily push. So what's after a push to the downside? That's right, an exhaustion to the upside. So this would be our weekly push and exhaustion, and this is our daily push and exhaustion. So that means that even though price is reaching an area of sell sensitivity because it's getting close to our monthly upper zone, we also have additional sell sensitivity respecting this head and shoulders. That doesn't mean that we can't find an entry to the upside on the lower time frame when we respect push and exhaustion cycles on different time frames. Okay, so as mentioned, we are on the daily. Here's a push to the downside. Price is finding buy sensitivity at previous low. We're starting to see pin bar closes. So now let's take it to the 4H to see if we have an opportunity to capitalize on an exhaustion after this daily push to the downside. All right, taking it down to the 4H time frame, we identified a 4 hour mid-range zone by noticing and identifying horizontal buy and sell sensitivity. Now, what's important to notice on the 4 hour time frame? Well, here's our daily push to the downside, and what's really important about this push to the downside is that price failed to begin exhaustion at its mid-range zone. So what happened? Price broke to the downside, and because of this break to the downside, that's considered a push. We now see an exhaustion, and what we saw was a continuational push to the downside. But what's interesting about this continuational push to the downside? It is seeing buy sensitivity on a horizontal level, and that buy sensitivity on a horizontal level is identified by these pin bar closes. And this means that this has a high probability potential to be the beginning of price's exhaustion. Now you might be saying, David, you're crazy to look for an entry short. We have a potential head and shoulders pattern, and we have strong sell pressure for a push to the downside, but you're forgetting on the monthly time frame, we have a bullish engulfing candle close. This is an exhaustion, which means after a push, exhaustion, the highest probability play is a continuational push. So I know that we are going to see buy sensitivity on the lower time frames. So even though price broke below its 4H mid-range zone, we do see continuous buy pressure identified as pin bars. which gives us a good opportunity on the lower time frame, to look for potential entry to the upside, to retest this 4H mid-range zone to the upside once more, because we know that price wants to begin exhaustion. So now let's take it to the 1 hour time frame for a closer look. All right, down to the 1 hour time frame. Here's our 4H mid-range zone. Here's that push and exhaustion that we saw on the higher time frame. Remember, price made a continuational push to the downside, because that's what happens. After a push to the downside, we've seen exhaustion. We saw sell pressure enter the market for continuational push. This is a standard play. But what are we seeing now, which we mentioned on the higher time frame? We're seeing horizontal buy sensitivity enter the market, and that is a ton of buy respect. So this trade also comes down to experience. When you see buy sensitivity on a horizontal level, you know that price is struggling. This is a lower time frame consolidation. Price is struggling either to break to the upside or to the downside. So from experience, I have a high probability assumption that price will continue the battle before then it either comes back for exhaustion or continues to the downside, which is why when we take it to the daily time frame, I'm fairly confident that price will make its way to its 4H mid-range zone at least once, maybe even a couple more times before then deciding its overall higher time frame direction. As mentioned, we see buy sensitivity, and we identified our daily mid-range zone because, again, we still see horizontal buy and sell sensitivity. So what does this mean? This means that our daily mid-range zone is price's last area of sell pressure before then its 4H mid-range zone. So if price is able to break its daily mid-range zone to the upside, it has free range to its 4H mid-range zone. Not much sell pressure to the downside until it reaches its next area of sell sensitivity. So it's time to talk about entry. So high probability entry, what I'm looking for is I'm staying patient, I'm waiting for price to make a push, breaking above this 1 hour mid-range zone to the upside. This would be significant because this is an area of sell sensitivity, so a break to the upside is a push. What's after a push to the upside? That's right, an exhaustion to the downside, where then we would wait for buy pressure to re-enter the market, price action confirmation, so a bullish engulfing candle close before an entry to the upside. TP2 is at our 4H mid-range zone, which is our next area of sell sensitivity. Once price reaches take profit 1, we move SL to entry. This is a lower time frame trade. Keep our risk low. What would make this trade invalid? Very simple. If price sees too much sell sensitivity at its 1 hour mid-range zone and fails to break to the upside, this trade becomes invalid because we know that there's not enough buy pressure to move price to our 4H mid-range zone. All right, that's it for Euro Kiwi. On to gold.